it may be too late to make a quick turnaround profit. But that doesn't mean you are too late to the pretty to really great investing means continue to deliver shareholders view for years, which is a good argument for trading active investment as a hobby and not a get rich quick scheme. The next question is how to manage stock trading risk. Wherever you fall on the investor traders spectrum, these 4 steps for how to trade a stock can help ensure you to do it safely. The first step is lower risk by building position gradually. There is no need to cannonball into the deep end with any position. Taking your time to buy via dollar cost averaging or buying in third help reduce investor exposure to price volatility. Morrow says you can also look into high dividend stocks which pay out a portion of earnings of investors and ETFs which allow you to spread your risk out among multiple companies. The second is ignore hot tips. People posting in online stock picking forums and paying for sponsored ads touting sure things stocks are not your friends. In many cases they are part of a pump and dump wrecked where shady people purchase buckets of shares in a little known thinly traded company, often a penny stock, and hit in the internet on hype it up. As underwriting investors load up on shares and drive the price up, the crooks takes their profits, dumps their shares and send the stock carrying back the earth. Don't help them line their pockets. The third is keep good records for the IRS. If you are not using an account that enjoys tax frauded status such as 401k or other workspace accounts or a Roth or traditional IRA, taxes or investment gains and losses can be complicated. The IRS applies different rules and taxes rates and requires the filing of different forms for different types of traders. Another benefit of going good records is that looser investments can be used to offset the taxes paid on income through a neat strategy and tax loss harvesting.